Good afternoon, ladies and gentlemen, and welcome to the ORCADIAN Energy PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it's appropriate to do so on the Investor Meet Company platform. And before we begin, as usual, I would just like to submit the following poll, and if you'd give that your kind attention, I'm sure the company would be most grateful. And I would now like to hand you over to the executive management team from Orcadian Energy PLC. Steve, good afternoon.
Good afternoon, everyone, and welcome to this investor update. What I'm showing you at the minute is a picture of the Ring of Brodgar in the Orkneys. Sadly, we aren't there. We're in Surbiton, and Alan's in Leatherhead, but it's a lovely spring day here, and the blossom is spectacular. So spring is all about renewal, new tax years, and broker initiation notes. On that last point, Zeus Capital published their initiation note on ORCADIAN this morning with a total risk NAV of 84p a share. And this update is about how ORCADIAN is transforming itself from a one-trick pony where everything rested on successfully completing the pilot deal into a company with a broad portfolio of funded developments, innovative projects, and compelling prospects. I'll let you read that one at your leisure and move on to what our strategy is for ORCADIAN. Fundamentally, our main objective has always been to deliver a high return for our investors. And now that we've completed the deal with Ping, we'll do that by supporting Ping on the road to delivering FDP approval for pilot and getting that field into production. But alongside that, we want to maximize the value of the Elke license, which lies just to the south of Pilot. That could easily deliver 100 million barrels of oil, and we want to maximize the opportunity to develop that field as well. And since the 33rd round opened a good while ago now, I can't recall actually when it opened. It was in 22, at the end of 22 it opened. We pursued as many opportunities as we actually had the capacity to do. And we've been delighted to get 2 offers of awards that we've received, and we're hopeful that NSTA will deliver the final tranche of awards. We were hoping it would be by the end of March. We now know it's probably the end of April, maybe early May. And we're very optimistic that we'll get 3 awards from 3 applications. But I also just wanted to remind you of who's involved in ORCADIAN. So obviously there's myself. My background was with BP in the past. I'm a petroleum engineer. And what I really enjoy doing is putting together development plans that really maximize the value of an oil and gas asset. We've got Alan with us here. He's an accountant by background, but he's been involved in the small cap space and financing companies like this for a long time. And we have a couple of great non-execs in Joe Darby, who used to be CEO of Lasmo, and Tim Feather, who helps navigate our way through the AIM market rules. Morris and Dave make up the technical team. Morris is a great geoscientist, actually absolutely first rate, and it's he who led all the work on those license applications. And Dave is a particular specialist in polymer flooding that's really helped us find the very best way forward for pilot. That's the team, and that is the team. We've kept costs low, and we'll continue to do that. But I also wanted to explain to investors what our business is all about. I always say that strategy is a combination of opportunity and capability. And what I would say our fundamental capability is transforming resources, be they prospective resources or contingent resources, into reserves. And funny enough, that's actually the business of every single pre-production oil and gas company that you can invest in. And we think this chart's a really helpful way for investors to understand the pre-production oil and gas business. Most companies start on the left-hand side with a gleam in a geologist's eye, a lead, then a prospect, and if it's good enough, it might get drilled, and with luck, you make a discovery. And there's always a lot of excitement with a discovery, but the next stage, appraisal, can be very expensive. Pilot was discovered by one well in 1989, and the 7th appraisal borehole was drilled by Venture in 2007. And it's actually all that expenditure on appraisal that makes Pilot a project that's ready to take forward. And to be honest, it's why I prefer to license discoveries that other companies have spent a fortune on than necessarily going all the way to the left-hand side. But sometimes you see a prospect that's just so good, you've got to apply for it. So once you have a licensed discovery, all you then need is a good development concept and patience. Actually, a lot of patience, as you can tell from the length of time it's taken us to move the pilot project to the point where Ping is going to take it forward to FDP. But eventually, you can strike a deal that sets those projects on a path to production, and that's the real champagne moment in the process. And actually, the real trick is to get through all these processes without having been diluted either at the asset level or the company level down to nothing. And that's 100% our focus. Our focus is to absolutely minimize dilution as we move these projects from the left-hand side of the page over to the right-hand side of the page. So that's just a little bit on what I think our fundamental business model is and how we go about our business. Let's review the assets we actually have. So obviously the core asset is Pilot. It's still Pilot, even though we're now down to 18.75% interest. We're delighted to have such a significant interest in the project and to be carried all the way through to the first offload of production. And that field has in the past had 2P reserves of 79 million barrels. Post farm out, we're going to classify those as 2C contingent resources development pending to be consistent with how Ping treated. And the net resource we have based on those Sproul gross numbers is about 14 million barrels. That feels really well appraised. There's no more money to spend on appraisal. It's just putting together the detail of the plan. The most important thing for Ping to do is to select the right vessel for developing Pilot. And I'll talk a little bit more about what that plan looks like. But it's not the end of the story. We actually have 53 million barrels of contingent resources in Elke and Narwhal. And there's actually appraisal and exploration opportunities around Elke, which could easily double that resource base. So we think Elke actually can be a bigger development than Pilot. And we got two 33rd round offers of award, which I'll talk about a little later, so I won't dwell on them here. Let me just remind you of one of the summary slides on Pilot. The field was discovered, as I said, by FINA in 1989. It's appraised by 5 wells with 2 sidetracks. There's lots of very good seismic data on it. What I'm showing on this map is actually a particular seismic attribute called relative extended elastic impedance. Remember that phrase. We also refer to it as REI Chi 27. And what it does is it gives you an indication of where there's gas in good sands, and that's where it comes up orange. It gives you an indication where you have either shales or water-bearing sands, and that's the dark blue. But it also gives you an indication of where you have good sands full of oil, and that's the cyan spot, sort of speckled color that makes up the main body of the Pilot field on this. And this attribute is utterly fantastic at telling you where you have oil-bearing sands. And actually, there's a minimum thickness. So, for example, the 2127-3 well just to the west of Pilot found 10 foot of oil, not enough to be commercial. And that shows up as dark blue on this map because you need to have 8 meters, 24 feet, 25 feet of oil-bearing sand before you get a response. So it's a really good predictor, and it's a really helpful tool for planning development wells and also for identifying prospects in the area. Pilot's got over 250 million barrels of oil in place. A polymer flood will get about 40% recovery within the developed area. We're confident on the rates we'll get from these wells because one of the wells that was tested on Pilot produced 1,800 barrels a day from a short horizontal section. And we're also really confident in polymer because on the Captain field, Chevron and then now Ithaca have been enjoying consistent success applying polymer flood across Captain. So there's a lot we learned from Ithaca on the Captain project, but we're very confident that that's the right way to develop this field. And we're going to develop this field with our new partner, Ping. So we completed the transaction to farm out an 81.25% interest in this license to Ping on the 31st of March. Actually, at around about 2 p.m. in the afternoon, there were no Easter eggs for me on Easter Sunday. That's not entirely true, but it's a carried interest. It's a carry that's repaid out of a reduced revenue interest for us to begin with. There's also some tax advantages built into the agreement, but we're currently not relying on any of those tax advantages in our economic evaluation. The upshot of the deal structure is that essentially we have 18.75% of the NPV of the overall project, but without having to find the money to develop it. Ping will find the money to develop it. And NSTA gave us a 2-year license extension to November 25 as part of bringing Ping in for the project. And NSTA have been incredibly supportive throughout this whole process. They really like the polymer flood approach, and they really like the ideas we have to reduce emissions on this new project. And maybe it's worth me just mentioning something important in the NSTA plan. You might have read some articles about this, but when NSTA published their recent plan, they're kind of segregating the existing fields into 2 types. There's going to be producing fields that are electrified and are low emissions, and those will get full support from NSTA to maximize economic recovery. And there are going to be fields which are not going to be electrified, and those fields will have to set a cessation of production date, and that will be fixed. So the North Sea is going to split into 2 groups. There'll be the electrified fields and the non-electrified fields. And it'll be the electrified fields that everyone wants to own. And all new developments will have to be electrified. So we see actually this shift in the NSTA plan being very supportive of bringing new developments, new electrified developments on stream. And, we see it's very important that we find renewable energy to support the power consumption of our FPSO on Pilot. There's a number of ways we can do that. We can either have a dedicated wind turbine, but there's actually a couple of planned wind farms nearby that could supply renewable energy to the Pilot FPSO. Ping have been at the forefront of looking at using renewable energy and wind power in particular to support other development projects they've been looking at. So we think they're a great partner to take this forward. They've also helped us optimize the development scheme in Pilot, and they see an opportunity to reduce the upfront costs substantially by starting with a tranche of subsea wells, and the current plan is 5 subsea wells before first oil and another 5 subsea wells straight after first oil, and then eventually adding a platform and completing the drilling program over the whole field, because to develop pilot, you need a lot of wells. That's one of the characteristics of it. Our production profile, we think we can start at about 10,000 barrels a day, build to about 20,000 barrels a day, and produce 20,000 barrels a day for about 10 years. So that's actually a great characteristic to have in any development project. You know, normally people want to get all the oil up front as quickly as possible. The risk in that is you have your 1 or 2 years on plateau, and in the plateau years, it's turned out to be the year that the oil price goes negative, or you're down to $30 a barrel just when you're having all your peak production. If you've got a long plateau, as we have in pilot, you're bound to have some low prices, but you're also bound to have some high prices. And on average, you're going to have a decent return. So we think that's actually quite a nice characteristic. But one of the other things we discovered as we were working with Ping is that by adjusting the polymer concentration, we can reduce the fluid handling requirements on the FPSO. And before we were working with Ping, we were looking at an FPSO that needed to handle 120,000 barrels a day. But now we think we can get away with a vessel that can handle 50, maybe 60,000 barrels a day of fluid handling capacity. And that's another significant reduction in the upfront cost of the project. So I'm going to give you a bit of insight into what the value of our remaining interest in this project actually is. So this chart, and I admit to having shamelessly copied the format from a Jersey presentation. I don't mind admitting that. It was a really good format, and I like to steal good formats. Our total revenue is approaching, and this is ORCADIAN's share of revenue, is approaching $1.4 billion over the whole life of this development. And repaying the carries really doesn't actually take that much out of that initial total revenue number. There's obviously a fair amount of OPEX and polymer costs, and we'd be saying our EBITDA was about $800 million. You take off the capex that's involved, and your pre-tax cash flows over $600 million. And assuming that EPL goes away as legislated in 2029, we'd be left with a post-tax cash flow for our share of $390 million. And this is all run at a $70 oil price. I think current oil price is about 90. And on an NPV basis, our share of the pilot project is about $140 million, which, as you'll notice, is a tad higher than our market cap. So bear that in mind. So pilot is a fantastic project. It's great to have in our portfolio. Ping is a great operator. We're really looking forward to taking the project forward with them, and we're really looking forward to seeing that value delivered for all our shareholders. But it's not the end of what we have. We have this license to the south, which has the Elke and Narwhal fields on it. Elke was discovered by this well here. It found 100 feet of oil. Narwhal was discovered previously by ARCO. This also found 100 feet of oil. It's not covered by 3D data, though, so we don't have good 3D data on it. And this map we're showing here is actually a map that EnQuest previously prepared when they were looking at this asset. And they were looking at the ultra-far amplitudes as an indicator of oil-bearing sands. But we've taken a look at the relative extended elastic impedance map, and it tells us some very interesting things. And what I'd like you to do is just keep an eye on Elkey North. And what you find is when you look at the REEI map, is Elkey North disappears. And for me, that's actually really telling, because it's telling me where not to put a well. This part of Elkey Main West is definitely oil bearing. Elkey Updit that looks like it's oil bearing. We don't have the REI attribute just over this little part, and we don't have any 3D over it, normal. But we think, there's well over 100 million barrels in the proven segments and the segments that are supported by this relative extended elastic impedance attribute. So we're excited about Elkey, and we're actually focused on how we can move that project forward as fast as possible. And we're also delighted by the outcome we've had so far on the 33rd round. So we actually participated in the round, and we pursued 3 license applications. One we did in partnership with Parkmead. Actually, Parkmead led that license application. And we were awarded the Finn discovery. Finn Bewley is a very large discovery, and it lies halfway between Piper and Claymore. It's a viscous oil. It's quite a tricky oil, but the opportunity is huge. We then applied for some shallow gas opportunities in the mid-North Sea High. We did that in partnership with Triangle Energy, who are an Australian company. There's some very compelling leads and prospects there, with about 270 BCF of gas in just 2 of those prospects. And then the third application we made, which has not been determined yet by NSTA, has a discovery with 114 BCF of sales gas that could be developed as a potential gas to wire with carbon capture project. We're quite excited about that. We think that's a project even Ed Miliband's going to love. And we also have a compelling prospect with 153 BCF of prospective resources. Well, we don't have it. We've applied for it, and our fingers are crossed, and we're hopeful. And obviously, I can't guarantee that we'll get that. And we're now expecting these awards in early May. And I don't know how many times I've told people when NSTA expect to make these awards, but one day they will. So I'm going to tell you a little bit more now about Finn Bewley, and then a little bit more about this mid-North Sea High opportunity. So I said it was big. It's over 900 million barrels in place. It was actually discovered in 1974. There was one well tested by BP in 1977, and it did flow a 10.6 API oil at 10 barrels a day. So we're expecting a viscous oil in this reservoir. It's a pretty good quality reservoir. We're expecting a viscous oil that has viscosities probably between 2,500 and 5,000 centipoise. That sounds very high, but actually in Alberta, they're successfully polymer flooding oils that are over 10,000 centipoise. So it's definitely possible to produce this kind of oil. The recoverable 2C resource is 292 million barrels, but we don't have all of the acreage. There's only 257 million barrels on the blocks that we've been offered. And we're looking at lots of different opportunities, including downhole radio frequency heating to just warm the oil that's close to the wellbore so that we can get good initial rates, and actually using geothermal energy to warm the injection water so that we can reduce viscosity in the reservoir. It's possible to actually reduce the viscosity by about 90% by increasing the temperature from reservoir temperature from about 30 degrees centigrade to 50 degrees centigrade. There's actually another heavy oil reservoir above that. Maybe that one's too difficult to develop offshore, but it's there. And the license also includes the Lowlander and Midlander discoveries, which are high H2S discoveries that could possibly be tied back to other infrastructure. They weren't the main target we were going for, but it's always nice to get another discovery in your portfolio. If I move to the south now and look at the Quad 29 shallow gas, we've identified on seismic that we got from TGS. TGS actually gave us a preview of all their 3D seismic over this and helped support us in the license application. They've been a fantastic partner to us, actually, on all the work we've been doing in Pilot and LK and so on, but also here. We've identified two major prospects. One's called Glenloch. It's got 131 BCF and a pretty low relief structure. It's very similar to the Aviat field that Apache are developing to supply gas to Forties. And then there's another prospect called Brecca that's got 138 BCF in stacked sands, very analogous to a series of Dutch shallow gas fields that are currently on production in the Netherlands. And you know, we're optimistic that these prospects do actually have gas in them. We've got some ideas on how to de-risk it further before there's any drilling. And development would actually be fairly straightforward. You know, you'd use, you'd have compression. That's one of the features of shallow gas. You start at a low pressure, so you have to start with compression. But we could tie into T number 6 on the CATS line and export gas into the grid that way. And we think there's opportunities to use renewable energy to provide the power for that compression when the wind's blowing, and actually back it up with gas power when the wind's not blowing. So we're quite excited about this and looking forward to talking to other companies about farming into opportunities here and to farm into opportunities on Finn Beauly. So, you know, we've been very diligent in trying to expand our portfolio and increase the number of opportunities that we're looking at. And this here is an update on what our resource position now is. And I've ordered this table so that the prospects are on the left-hand side and the projects that are just development pending are on the right-hand side. And what I can say to you is that the barrels on the right-hand side are a lot more valuable than the ones on the left-hand side. So obviously there's a huge amount of value in those contingent resources on Pilot. You know, $140 million NPV10 at $70 a barrel. There's a lot of value in the contingent resources that are sitting on Elke, and a lot of value to be had by taking forward the prospects that are sitting around that. And Glenloch and Brecca net to us are another, 20 million barrels of oil equivalent. So 130 odd BCF of gas net to us. But the really big number on this page is our share of the Finn Beauly discovery. So we actually have over 200 million barrels of contingent resource. You won't find many other companies listed on AIM that have similar scale of resource. And we've got, nearly 75 million BOE of prospective resource, about 50 million on a risk basis. So we're talking about a resource base of 250 million barrels, and a very important part of that carried all the way through to first oil. So just in summary, 31st of March is a watershed day for ORCADIAN. We completed that transaction with Ping Petroleum, and the company future is fundamentally underpinned by the carried interest in the pilot project. But we've been building what I think is a great portfolio of funded developments, innovative projects, and compelling prospects. I said previously there's some big changes coming for the North Sea. If you own production in an asset which is not going to electrify, you're not going to be able to push out the COP date any longer. Those are going to become actually very difficult assets to own. But new developments, new electrified developments, will be the ones that people want in the future. And we focused on licensing as many opportunities as we had the capacity to pursue. And the reason we did that is we expect a licensing hiatus under Labour. I think projects will go ahead. I think prospects will get drilled, but I'm pretty sure that Labour won't be running any license rounds for a little while. So we wanted to get our hands on as much acreage as possible in the time available. And I've got one other thing to point to. And, you know, I shouldn't read these bloody things, but I read the LSE board sometimes and the ADVFN board. And one of the punters there said, "We spent money like teenagers." Now, my teenagers are very responsible, so that was actually quite a compliment. But actually, all my teenagers are now grown up. They're in their 20s and 30s, but we'll gloss over that point. To acquire that 200 million barrels of contingent resource and 50 million barrels of risk prospective resource, we as a company have raised $9 million. And I would advocate you go and have a look at all the other companies who are boasting either contingent resource or prospective resource in the UK and see how much money they raised to acquire those. So we're always going to be low cost. We're always going to be focused on keeping the costs as low as possible. And the higher the market cap, the happier we as managers and shareholders will be. So that's the summary of the story. And I'm now ready to move on to the questions. And I understand that there are actually 6 questions that were pre-submitted. So what I'll do is go through those to begin with, and then we'll be open for questions from the floor, as it were.
Perfect. Steve, Alan, if I may just jump back in there, and thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while the company takes a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Steve, Alan, as you say, we did receive a number of pre-submitted questions ahead of today's event. And as you can see there in the Q&A tab as well, we have received a number of questions throughout your presentation this afternoon. So firstly, thank you to all of those on the call for taking the time to submit their questions. And Steve, Alan, at this point, if I may just hand back to you to address those questions where it's appropriate to do so, and I'll pick up from you at the end. Thank you.
Very, very good. Right. So let me just move that on. Right. So the first question, and I'll read the question out just as it's posed, and then I'll go through the answers. So on the Finn Bewley oil field, it's mentioned that yourself and partner will be assessing the feasibility of reducing the viscosity of the oil with maybe incorporating a geothermal system. Has this technique been used in any other global oil field? What is currently the heaviest oil that's being produced globally from under the sea? Well, funny enough, I have a slide on that. There's a lot of heavy oil produced offshore, and some in Mexico that is even heavier than that at Finn Bewley. So Finn Bewley was measured at 10.6 API when BP tested the 14-15-2 well in 1977. And the Ayatzal field, which is a 1 billion barrel field in Mexico, has a range of APIs from 9 to 12 API. It's also in a carbonate reservoir, which makes development much harder. But it's producing very well, over 100,000 barrels a day. But actually not on this slide because the development's still underway. There's another field, the Cayab field, again in Mexico, which is 8 API. And Pemex are planning to spend $18.7 billion to develop a resource here of about 500 million barrels. So there are many examples of heavy oil being produced offshore, and actually some examples of much heavier, extra heavy oil, that's the phrase that people use to describe it, being produced offshore. But the question was also about, how does geothermal help you here? And are there any geothermal developments happening offshore? I don't believe there are geothermal developments happening offshore, but the using heat to increase reservoir temperature is very well proven. I mean, all you have to do is look at all the steam projects. But also injecting water at a higher temperature to reduce reservoir viscosity is a proven way to improve recovery. And I've got another slide just to illustrate that. So this is actually the Finn oil viscosity range versus temperature. And we have a set of custom correlations that we use to predict oil viscosity because we've thought a lot about it. And we use combinations of the Benison and Petrosky and Farshad and Beggs and Robinson correlations to come up with predictions of oil viscosity at different temperatures. And we calibrate it to actual viscosity measurements, which are done in the lab at specific temperatures and with specific amounts of gas recombined with the oil. And based on the data that we have on Finn, we think that yellow box on the left-hand side on a logarithmic scale is the range of viscosity we expect. And one of the things that a logarithmic axis does is it disguises just how dramatic the reduction in viscosity is if you can increase the temperature. So we took the reservoir temperature from about 80 degrees Fahrenheit up to 120 degrees Fahrenheit. So that's 30 degrees C up to 50 degrees C. You go down to a few hundred centipoise. That's the same as Mariner and a number of heavy oil fields that are already producing. So we really think this will work. And we really believe that using hot polymerized water could easily get recovery in Finn up to 30 or 40%. So that's the end of my extra slides to answer the Finn question. Let me move on to the second question on the list. And once again, I'll just read the question. Hello, everyone. Firstly, congratulations, Steve and the wider team at ORCADIAN on the progress and completion of the farm-out deal with Ping Petroleum. Thank you very much. Whilst it is disappointing that the share price has fallen back firmly at the time of submitting the question, it's not a surprise as many will have taken the opportunity in making a quick profit. Apart from that reason, there are assumptions that a cash raise will be announced, which could also affect the share price. Can you advise what is the current monthly cash burn and if the monies forthcoming from Ping will be enough to ensure no fundraise is required for the foreseeable future in order to fund general costs and the eventual repayment of the Shell loan? Thanks, Gary B. Right. You're right to ask this question, but I'm also right to be very cautious in how I answer it. I mean, what I can say is that we're looking at multiple options to ensure that the company has the cash it needs to meet its obligations and to progress the projects we have under license and the licenses we expect to sign as part of the 33rd round. What you got to remember is we're substantial shareholders and we will always favor deals and structures that minimize dilution. So the Ping deal is transformational for the company. Previously we really only had one thing we could do, which was to issue little bits of equity to keep the company on track. But it opens up many possibilities for financing the company that just weren't available to us before. So we're working on that. We won't say any more about it at this time. In due course, we'll have more to say. So let me move on to the third question. With a considerable payment to follow FDP approval, I imagine it's fair to assume that this will be the main focus of attention over the coming weeks and months. In a best case scenario, using all your expertise, experience, and subject knowledge, what would you consider to be a realistic time frame to both plan submission and the likely time thereafter for approval using other North Sea developments as a rough guideline? Thanks. So, we expect FDP approval sometime during 25. And our focus with Ping in recent weeks has been 100% on getting this deal over the line and bringing all our partners like TGS with us. We're there now, and the next phase is actually settling on the right vessel for pilot and pulling together a field development plan that works for NSTA, OPRED, that's the Office of Petroleum Regulation for Environment and Decommissioning, Ping, and ORCADIAN. So we'll help with the subsurface and reservoir engineering aspects of the FDP, as we've already done most of that work. And what we'll be doing is optimizing the well patterns and polymer concentrations to fit within a specific vessel's fluid handling capacities. And one of the things I've learned not to do is to predict exactly when things will happen. So I'm not going to say exactly when we think it'll happen, but we do expect it in 25. Next question 4, curious about the polymer flood process. With many other industries, it's normal for companies to protect their technology using patents. Watching a previous presentation, you talk about Ithaca having success using polymer flood. Is ORCADIAN's method going to be different, or do patents not apply for some reason? Also, looking ahead, will ORCADIAN be able to grow future revenues by offering their expertise in the process to other companies? So, oil companies do sometimes try to patent particular approaches, but they're actually quite hard to get those patents. And in most cases, the technologies sit with the service companies, and the technologies and patents sit with the service companies and suppliers. And, one of the ways we really understand what's going on Captain is by talking to Chimera and SNF, who both supplied polymer to Chevron and Ithaca for Captain. So we benefit from what those companies have learned on Captain. And we also have direct contacts with Ithaca, and we found the team there really open to sharing knowledge and learning. And they also publish a lot. They publish a lot of papers, and we avidly read all those papers. So, we don't really think that we would be selling our expertise to other companies for a day rate. That's not really my plan. But we might well be able to leverage our experience to access other opportunities. So there is actually potentially value from what we've learned in this whole process. I mean, what we've learned in pilot has really informed us about how to approach the Finn Bewley opportunity. So you can see how that's actually created one of the main opportunities that we have in front of us. So on to question 5. With M&A activity happening elsewhere, do you feel ORCADIAN could end up being on the receiving end of a future takeover bid before first oil? Or is it more likely that the business grows as is? If a takeover was mooted, what do you feel would be a valuation starting point for serious consideration? Thanks, Gary. That's an interesting question, Gary, but you don't really expect me to give a bidder a target price, do you? We went out of our way to try and capture as many opportunities as possible in the 33rd round. We're batting 66% just now, and with luck come the end of April or early May, we'll find out if our third application was successful. And we also intend working with Ping to relicense some of the discoveries and prospects that we saw around pilot. Of course, that's all competitive bid process. We can't guarantee the outcome. But, as I said before, we have 50 million barrels of oil equivalent in risk prospective resources and over 200 million barrels of contingent resource, with about 14 million barrels carried all the way to first oil. That potential is worth a lot of money. So the target price for a bidder is quite high. Right, so I'm on to question 6. Can I draw your attention to the statement which was taken from an Orca share chat forum? I must stop reading those. Could you please respond and explain the loan conditions so that anyone who may have seen them can have an official response that can give closure? So the quote begins, Shell doesn't trust Steve and has demanded conditions that I haven't seen before. That says it all. Thanks, Gary. So you're absolutely right that a director giving a personal guarantee is unusual, but it would be a mistake to draw the conclusion that Shell doesn't trust me. I would say we have a healthy respect for each other. And suffice to say, I provided that personal guarantee to ensure the deal was being completed and to maximize value for all shareholders. So a couple of questions that have been submitted so far. And this is from Giovanni. I believe that the company is massively undervalued at the moment, as several experts working in the oil industry expressed their view to me that a fair current value for the company is in the region of 50 million. Do you have any idea why the share price has been decreasing each time good news arrived? Even last week, there was a bit of a jump and now back at the same price as before the RNS. Also considering that last week's news was a massive milestone for the company. So, we were a little puzzled by the muted reaction to the, what we think is absolutely transformational news that we released on the 2nd of April. And I think on Monday, we found out why the share price softened after a pretty good rise last week. So Woodland Capital sent a TR1, indicated they've been reducing their stake. And one way to look at that is it's given lots of new shareholders an opportunity to buy shares in a post-deal Orcadian at pre-deal Orcadian prices. Once Woodland has finished selling their stake and those shares are in the market rather than with the market makers, I'd expect our share price to rise again. But I'm not making any predictions because that's a fool's game. And the second question here from Giovanni. In this scenario, while the company is so undervalued, do you have any concerns about receiving a takeover bid offer and being bought cheaply? I sort of answered that already, but I'd say I'm confident that any potential bidder would realize that to be successful, they'd have to pay a fair value for our portfolio. The board own a lot of this company and we won't sell out cheaply. Of course, we'd be happy to sell at a high price. So, that would be good. And I think we've got to the last question here from Janice M. The question is there going to be a placing to raise further capital in the near future? Well, I'm sure you understand, Janice, I can't actually answer that. What I said is we're looking at lots of options and we're very focused on options that minimize the dilution in the company. We're very, very focused on that all the time. But equally well, we have some obligations to meet and we will do what's necessary to meet them. But it may well not be a placing. So I think I've finished all the questions, unless anyone types in something very quickly. But I'll hand back to, I've got another question here. Yeah, so the first question is, will Orcadian be charged an interest rate for the carry? If yes, what is it? So it's 8% above SOFR is what the interest rate is. And that ends up being pretty close to what the discount rate you'd use in an NPV calculation. So that's why our NPV is roughly the same as it would be if we just had 18.75% of the project. With all the knowledge available today, what would be a realistic first oil date for pilot? Well, what I'm saying earlier is we think 2025 is when FDP will happen. It all depends on exactly what the plan is, and there are certain plans that could be implemented a bit quicker, but it's possible, 3 years is kind of typical period for a project of this scale. It might be possible to get it done in a couple of years, but I'm thinking 2028 for first oil. And has Orcadian considered what dividend policy it intends to pursue once there is free cash flow? And to be honest, we haven't put our minds to that, though once we have cash flow, we would definitely want to be paying dividends. What the policy is it 50% of free cash flow or what it? I think that's something you can only answer at the time. But once we have free cash flow, we would like to have a dividend. So I think that's now all the questions, and I'll hand back to our friends from IMC.
Perfect, Steve. That's great. And thank you very much indeed for addressing all of those questions that came in from investors. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended, just for you to review to then add any additional responses, of course, where it's appropriate to do so. And we'll publish all those responses out on the platform. But Steve, perhaps before really just looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that would be great.
I think I've used up all my words. I don't have any words left. I've been delighted to have the opportunity to tell you more about the ORCADIAN story and what it is I think we're really good at, which is, identifying fantastic prospects and identifying opportunities to develop fields in ways that others have missed. And also to talk to you about the other opportunities in the portfolio that actually build on the success we've had on pilot. So I'm always happy to come along and do these presentations. I like to do them when there's something new to talk about. Maybe I'll be back again in May if we actually get this other license that we've applied for. So thank you all for your attention, and good afternoon.
Steve, that's great. And thank you once again for updating investors this afternoon. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Orcadian Energy PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.
Hmm.